Hey guys, I'm Nick,
And I'm Tony.
and we're the Sicilian Brothers.
And we're sitting down today with Lee Siegel, and we're going to do some insurance conversations regarding Snowvid 21.
That was just last week, and we got our ass kicked. So we've decided to bring in some insurance and try to get some actual definitive answers for everybody.
So we're here this morning with, we're here today technically with Lee Siegel from Integrity Personal Insurance, and this whole concept for this video came out of the what do you want?
Snowmageddon of Texas.
Yeah, the
What's
snowstorm.
I like Snowvid 21.
That's perfect. Snowvid. That
Where
was
did
just
that
last week.
Where did that come from?
I just saw it somewhere on a T-shirt. So.
Person's a genius. Snowvid 21. So we had Snowvid 21 happen, and it was. I mean, I've been in Texas 17 years, and we've had some cold weather. We've never had this drastic of a long run of sub-zero temperatures.
So they are estimating right now that the insurance losses from this Snowvid 21 is going to exceed $26 billion.
That's with a B.
With a B. Compare that to in 2017, Hurricane Harvey, which flooded Houston, was $20 billion. So this would be $6 billion above that in insurance losses, just to give you some kind of scope of the damage, because this was not just isolated to Houston like Harvey was. This was the entire state was affected by this winter event.
And that's everything. That's not just residential. That's commercial.
Correct.
Okay.
Sure, because
Yeah.
we all saw pictures of apartment complexes that
yeah.
looked like there was a waterfall coming out of some of the apartments and a lot of commercial buildings. Matter of fact, our agency, the building we were in, was flooded, so we're working from home right now because of the damage to our office.
You just mentioned a couple things there that there was flooding, and there's differences in flooding, like what your insurance carrier will pay out regarding flooding, right? Sure. So flooding from outside weather in compared to bursted pipe, they fall under different coverages. Am I correct there?
Exactly, yeah. And a lot of times when people talk about water damage in their house, my house was flooded because my water heater broke, or a hose to the dishwasher broke and flooded my. That's flooding from inside the house. True flooding, that's really water damage. True flooding, like with Harvey, was rising water from outside the home. And that's not going to be covered by any Texas homeowners, investment property, rental property. You have to have specific flood insurance to cover that expensive type of damage. Yes.
And that's why I brought that up, right? Because we obviously we do loans for properties, and you'll do the insurance for those customers, and sometimes those properties are in zoned flood zones,
floodplain
right?
areas. Sure.
Yes, and so that's going to be a separate insurance policy, correct?
Correct.
So that's like Harvey. When you're along the coast, if you're in a flood zone, you're going to have a separate policy for that. So Harvey fell under different coverage than this.
Yeah, and I know we're here to talk about Snowvid, but just to go back to Harvey, that was the tragedy, because 80% of the homes that were flooded were in what were considered preferred flood zones that were not required to have flood insurance. So many of those people lost their homes basically because they didn't have flood insurance, because there was no requirements to have it. So realistically now, if I'm talking to anybody that's looking to purchase a property in Houston or the Gulf area, even if they're in a preferred flood zone, they should get flood insurance.
Absolutely. And that's something that you can help us, right? So if I call you, we get this question all the time. How do I know if I'm in a flood zone?
Real easy. There's a carrier site we just go to. We just enter the address, and it'll tell us the flood zone.
Right.
And if it's what's called a preferred zone, which is flood zone X, then those rates are set by the NFIP, the National Flood Insurance Program. They're not variable rates. So those you can say exactly what the cost is going to be. If it's in a standard zone, a flood-prone area, like a zone AE, Then the cost of the insurance is going to depend on a flood elevation certificate, which the insured has to have, and that can affect the rates of the insurance drastically depending upon how elevated the house is above the lowest ground floor elevation outside the home. So a lot of people will say, well, what's the average cost? Cannot tell you because it's going to vary so much based on what that elevation certificate says.
And that's something that the buyer or whoever the client would get with the survey?
Correct. And the seller may actually have one.
That link that you said that you used to check, is that public or is that just for insurance?
No, it's just for insurance. Yeah.
Just because if it was public, I would have posted it up. But I usually, for our loans, I'll usually use like FEMA flood maps. Like you can actually do a Google search and find flood maps in your area. Sometimes, like when we're doing loans out in El Paso has their own flood maps. They don't have many flood zones in El Paso, but
do you think that there are more people so we were talking about numbers. You said, what was the billions? That
26 billion.
Okay, so 26 billion on this payout, roughly. And then Harvey was 20, right? But you also said that 80% of the people that were affected during Harvey didn't have proper coverage, right?
Right.
So do you think that because Harvey happened, people have better coverage for this? Or was this just such a act of God, as we call it, that people had better coverage?
Well, I think they
were
were really kind of talking apples and oranges a little bit because pretty much any homeowner's policy is going to have water damage coverage on it. It's just to what extent. So it's unlikely that a person has homeowner's insurance that doesn't have water damage coverage. So I don't think there's going to be as many people that are going to be out of luck based on that. Now, when we get to the investment property side, there could be some possibilities of folks not being covered if they didn't have the proper type of policy to cover their rental property.
And that's something we talk about with our clients often is like, hey, don't just get the cheapest policy.
No.
Don't just go for the cheapest monthly. So is that, do you have you want to talk about anything there where if you're talking directly to your client, it's like, hey, this is why you call me, right? It's this.
What not to cut corners on?
Really, when it comes right down to it with investment properties, landlord policies, there are essentially two policy forms. There's a DP1 and a DP3, dwelling policy 1, dwelling policy 3. The dwelling policy 1 is just going to be your cheap, basic, actual cash value policy that's only going to essentially cover the investor for fire and lightning, windstorm, and hail. That's it. There's no water damage coverage on that policy whatsoever, and it's an actual cash value policy. Yes, it's going to be cheap.
Yeah.
But when you have a loss like this, you're going to wish you had paid an extra $100, $200 a year. There's not a gigantic savings by going cheap. I'm sure there are certain investors that have a lot of properties that maybe if they look at an evaluation of their total cost, they may say, okay, I can afford to skimp here because if I have a loss at one property, it's not going to affect me that much. But what if you have losses at 10 properties, which is very possible when you have an event like this? So again, it still goes back to looking for the right coverage, not the cheapest coverage.
I think that's huge. The right coverage, not the cheapest coverage, because when it comes to insurance, we all want to be protected, but that's the one thing that we all try to like skimp on, like, oh, save money and renew your car. Or I think you said we were talking off camera before, and you were like, some of the big marketing trickery is bundle, right? Mm-hmm. So bundle your home and auto, and so trying to trigger people to skimp to save, and this is where you wouldn't. This is one of the moments where you'd be like, oh damn, I wish I had paid a little extra for that replacement cost, right? Because there's a huge difference between actual cash value and what the cost is today to replace that roof, or
Sure, it's going to be a depreciated value or on a payment schedule. So basically, now if somebody has a 2-year-old roof for example, that's damaged in its actual cash value, they're still going to get the majority of that paid by the insurance company. But, if the roof's 5, 6, 10, 12 years old, they're almost self-insuring because the insurance, the actual cash value might be 40% of replacement costs.
So I'm only going to ask this because this is mainly an educational video. Can you just break down the difference between what an ACV is versus what the other policies are, right? So just for why is it that way, right? Like you said 2 years versus the 14 years, right? What's the difference there?
So if you have a replacement cost policy and you've got a 10-year-old roof, the insurance company is going to pay the full value of a new roof, not a depreciated value like you would have with actual cash value. So that's really the main thing. And it's not just your roof, of course. So for people that had water damage from this storm, their flooring, the walls, the cabinets, other fixtures that were damaged. Again, if it was an actual cash value policy, they're getting pennies on the dollar. Unless they could prove that everything was very recently replaced, they'd have documentation that says, I just put these in a year ago, then they might have a better chance of at least getting a higher value replaced on it from the insurance. Otherwise, it's just going to be.
So they're not able to go after like the depreciation of those items.
No, there's no recoverable depreciation when you have actual cash value on your policy.
Yeah, so it's huge. The savings looks great up front, but in Texas specifically, not that Snowvid's going to happen in our lifetime again, because I think they said that the last time that this had happened on record was like 1907. So might not happen again, but if it does, make sure you're properly insured. One of the most common occurrences that you'll need insurance, as we're talking about roofs, is during hailstorms, right? So being the homeowner, you want to get the most bang for your buck and make sure that your policy is covering like your, whether you have a 30-year roof or, right? So they're going to depreciate it out over the type of roof that it is as well, right?
Right.
So if it's a 30-year shingle compared to a 15 or a 20-year shingle, right, then, I mean, there might be a $3,000 retail difference, but it's it might be you getting insurance money or not getting insurance money based on your deductible.
Correct.
And your ACV or replacement cost.
Yeah, and that's where, again, always pays to carry a 1% deductible for your roof, because, again, the savings on a 2% deductible is not that significant. So say you have a $200,000 home. With a 1% deductible, it's $2,000. With a 2%, it's $4,000. Well, if the roof is only going to cost, say, $6,000 to replace, well, now you're only getting $2,000 with a 2% versus getting, the balance paid. And again, the cost differential is not that extreme where it would make sense to go with the lower deductible or with the higher deductible. That's the thing when you talk about cutting costs. Well, what is that cost differential? If the savings was $1,000 a year to go with a higher deductible, maybe it would make sense, but it's not. It's hundreds or less dollars.
You're getting a 50% deductible savings, but you're not paying 200% for your premium, right? So you're not double paying for your premium's not doubling, right?
Exactly.
Yeah.
And it's almost like that saying of you're stepping over dollars to pick up pennies, right?
Yep.
So
Great saying.
So in this case, you're literally walking away from money, and under like you're not really saving. You're hurting yourself. But there are some investors that will reinvest that money. So they'll look at, I think you mentioned someone might have 10 properties and they had to file, on all 10, a claim on all 10, compared to the investor who only has one rental and it's one claim every couple of years, if right? So there are two different mentalities of investors out there, right? The guys that have multiple compared to the onesies and twosies. I think you mentioned, the reason I brought that up is because you mentioned like for that person that has multiple, there might be a huge annual savings, thousands. And if they reinvest that, they could afford to, like you said, self-insure.
To an extent, yeah. I'm not recommending that. But again, that's one of those things where I have seen some investors, who are very organized. They've got spreadsheets and they know all their costs of their, their mortgage, their property taxes, all those type of things. And they do a thorough analysis and they know what they're getting into by doing that. The average investor probably hasn't done that thorough of an evaluation where it makes sense to even consider those type of things.
It's like the passive investor compared to the active investor, right? The investor who their business is their real estate portfolio. That's one. Don't try to be that guy if you're not that guy.
Correct.
And so if you're using that stepping over dollars.
Stepping over dollars, pick up pennies.
Yeah. So.
And while we're on the subject of claims, so again, because of, this, they estimated that there were going to be about 750,000 claims filed from this Snowvid 21. One of the things that I really try and counsel my clients on, now obviously, of course, if you've got a property, whether it's your home or your investment property, and the pipes burst and there's water just pouring through your house and your ceilings are coming down, well, automatically, yes, file that claim, get on with your insurance company, because, a lot of the water remediation companies got slammed, plumbers got slammed. So a lot of times you had to get on a waiting list, even with claims adjusters, getting able to get an appointment to have someone come look at, what the damage was. But in some scenarios, doesn't always make sense to file a claim. You want to get a estimate from a repair person of what would it actually cost to have my walls, the sheetrock taken care of, some flooring replaced. Does it make sense? Okay, I've got a $1,500 deductible, and the cost is going to be $2,200. Does it make sense to file that claim to get $700 back? No, it doesn't, because in the long run, you're going to be penalized for filing that claim. And I hate to say penalized or surcharged, but the bottom line is when you file claims, that goes on your loss history. Every company subscribes to what's called the CLUE report, Comprehensive Loss Underwriting Exchange. So anytime we're looking at a property, all of the losses that you have filed and all the losses at that location are on that report. And some insurance companies, if they see a lot of claims activity, they're reluctant to insure that either that client or that property. So you want to use your insurance for catastrophic losses, not small losses that you can be able to take care of. It may hurt to pay a couple $1,000s out of pocket, but in the long run, it's better to save your insurance when you have a hail claim and you need a new roof that's going to cost $5,000, $6,000, $7,000, or water damage like we've just seen, where $10,000, $20,000 loss. Absolutely, but be judicious with using your insurance. I had a client that wanted to file a claim for a couple of broken windows. I advised otherwise, because again, glass.
Cheap.
$100
Yeah.
a window, maybe. That's the kind of thing you can take care of. Another person wanted to file for food spoilage. I'm sorry, I feel bad that you lost a couple $100 worth of food. That's not something you want to use your insurance for. So be judicious in using your insurance. Save it for when you really need it.
Yeah. You were talking about the potential for penalties and to increase, right? Now, let's say in Texas, right, a couple years ago, storm came through 5 years ago and hit our entire block. We had a horrible hail season, right? There were people on that block that didn't want to file a claim, didn't want to do insurance because they were afraid that their rates would increase. When something happens like that and it comes through an entire neighborhood, or let's just say Dallas in one, is it potential, because you said it's either the person or the property, is it potential that even if they don't file, they still might see an increase just because the
region.
Yeah, the region got hit.
Well, yeah, there's a potential for insurance companies to raise their rates within a given area, because you'll hear that a lot with people. Why did my rates go up? I never filed a claim. Yes, but the whole nature of insurance is pooled risk. So you may not have, but your neighbors did. You were lucky that you didn't have to, but unfortunately, you're going to see rates increase across the board. that's one of the things I'm really concerned about, moving forward is when you're talking about $26 billion in insurance losses, what are the ramifications long term with insurance companies as far as property rates? Are they going to skyrocket? Will there be some moratorium? Will there be some companies that say, I can't afford to be offering insurance in Texas? There may be companies that pull out altogether. There may be some companies, we've had some insurance companies that have said, okay, in the Dallas-Fort Worth area, in order for you to get replacement cost on your roof, you have to have a 2% wind hail deductible. So there may be situations like that happen going forward. And again, that's one of the reasons it's good to work with an independent broker like myself and Integrity, because we've got options. We represent 20 different insurance companies. So if company A decides, you know what, we're going to require 2% wind hail for people in the North Dallas area, in the North Texas area, well, we've got 18 other companies that don't require that. So we have other options. If certain carriers pull out of the state or just stop writing new business in a given area, we've got options. So that's one of the things where going with an independent broker going forward, I think, is going to be more important than ever, because nobody knows what impact rates are going to be faced with come renewal or later on this year as all these claims numbers start coming through.
Yeah, because you're just seeing, right? Just because you called 2 weeks ago, these are going to take years to settle.
I mean, there's companies bringing in, literally moving people, adjusters here, right? Like they're...
Yeah, they brought in
the storm chasers.
Yeah.
Well,
not even that. No,
those
are,
right.
Yeah,
Because there's so many claims,
Yeah.
they'll bring in claims adjusters, from other states,
Right.
to help get boots on the ground to go see all these properties that were damaged. They're bringing in what they call desk adjusters too, for more people to take those calls, to be able to communicate with the insureds and with the adjusters that are out in the field. So you're seeing a good reaction from the insurance companies. If there's a positive out of this is how they're reacting to it. A lot of them have set up catastrophic teams where they're able to react quicker and be able to get money to people to get those repairs done, or if they've been forced to leave their property because it's not inhabitable because there's so much water damage, to be able to give them temporary living expenses, for them to be able to rent a hotel, stay at another place. So again, there's been a good reaction from the insurance companies. Now, what that's going to lead to down the road, we'll have to wait and see.
All those numbers, right? So we have friends that lost their entire house, and the insurance put them up. They gave them a cash amount to go stay in a hotel for X amount of months. Is that all in their policies? So you can go, and is there a dollar amount?
Yeah,
like living expense?
So generally, once you have whatever the dwelling value is set at, and that can be established by a lot of different things. Most times each insurance company has their own replacement cost estimator to determine the cost of the dwelling, excluding the land. Because again, if there's a total loss, the land is still going to be there, slab's probably still going to be there. What would it cost to rebuild that home today with the same square footage, number of bedrooms, bathrooms, garage size, the same type of fixtures and so forth.
Everything.
Exactly, builder's grade, custom, deluxe, luxury, all the different categories there are. So once that number is established, then you have certain percentages that are automatically set. And again, this is going to apply primarily on homeowners policies. So there's going to be a percentage of that amount for personal property, all your furniture, clothing, electronics, dishware, things like that. Then you're going to have a percentage for other structures, which is going to be your fence, patio, pergolas, things like that aren't part of the actual house itself. If you had a freestanding garage, a storage unit, things like that, then you're going to have what's called loss of use or additional living expenses, and that is going to pay for temporary living expenses that you would incur because you've lost the use of your premises. And so that number will be set, and it'll appear on your policy declaration page. Again, if you don't know what it is, you can always ask your agent. A lot of people are not fluent in insurance. So it's always good to ask somebody so you know what exactly is on your policy.
And just to follow up, right, while we're on the same subject, what happens if it's a rental? What, right? If I had a total loss at a rental and my tenants have to go live somewhere, is there coverage for something like that under my rental policy? Potentially, right?
Yeah.
Do they make that?
Yeah, great question. So a rental property, a landlord policy, dwelling fire policy, is going to have what's called, it's called a couple of different things. There's fair rental value, there's rental replacement, there's a couple of different things, but that is basically intended for the landlord if that property becomes uninhabitable due to a covered peril. Now that can't be, unfortunately, for the people who lost power and the tenant was in there freezing. Unfortunately, that's not a covered peril, so if the tenant moves out because of that, sorry to say that's not something that the insurance will
But
pay
if
for.
if they moved out after a pipe burst, that's different.
Yeah,
Okay.
so that is basically going to give money back to the landlord for if they were charging $1,500 a month rent and the tenant had to be out for 2 weeks, they could be reimbursed $750, whatever that net amount is. Now, that's going to be up to the landlord. I would hope the landlord would refund that to the tenant, say, hey, I'm not going to make you pay rent when you couldn't live here. I don't, that now we're getting outside of my area of expertise on what the contractual lease is between the two. But this goes back to why if you are a landlord and you don't require your tenants to have renter's insurance, you're not doing it right.
Right. That's where I was going to throw that in there is that you see a lot of people, hey, I require renter's insurance, and this is the reason.
This is one of the reasons. Really, when you get right down to it, really the main reason is for liability purposes. You want to make sure that if something happens, somebody gets injured at your rental property, that the tenant's liability is picked up primary before they come after you as the landlord. It could be a thing where they've got a skateboard sitting out in the middle of the floor and somebody slips and falls. Well, you as a landlord, that's not really your responsibility. That's not really your fault that happened. But what if you're not a heartless person? You say, yeah, you can have dogs, just no pit bulls, Rottweilers, Dobermans, Chows, the vicious breeds. But they've got a golden retriever, and that golden retriever bites somebody, and that person is injured. Well, yes, they're going to go after the tenant, but you as the landlord allowed them to have that dog there. So, yes, they can go after you. So it's really primary is the liability. You can't move into an apartment complex probably anywhere without having renter's insurance. Again, it's for the liability purpose primarily. But as a landlord, you spin that on, look, if what happened in February of 2021 happens again and your furniture, your electronics, anything, your personal belongings are destroyed, that's not my responsibility as the landlord. You've got to protect your personal property. Also, if you have to move out because you have to go stay at a hotel, your renter's insurance will have loss of use, same as a homeowner's policy. You'll have some loss of use coverage so that you have those temporary living expenses to go stay at a hotel or whatever. So that's, again, those are reasons how you spin it as a landlord, so that they're protected, but it's really so you are protected for liability purposes, because that can be a huge hit. We always tell people, no on swimming pools, no on trampolines, because those are liability hazards. And if you're allowing tenants to have those, you're opening yourself up to liability exposure.
Yeah, it's and do you, just for a side note, do you do renter's insurance?
Sure.
So if you write my landlord policy, I can refer my clients to you and be like, hey, call Lee. He's got the...
Absolutely. And, a lot of apartment complexes require their tenants they want to be listed as like an additional interest on the policy It's more so that they're notified if that policy cancels for non-payment. So yes, you can say to your tenant, I want to see proof that you have renter's insurance. Yes, here's my policy. You don't know that that's enforced or not. They may have just paid for 1 month and then canceled it. But if your name is listed as an additional interest on the policy, then if that cancels, you're notified. So a landlord can either request or require their tenants to list them as an additional interest on the policy.
So just like your mortgage company on your primary residence, right? Just like your mortgage company would be listed as the additional interest or additional insured.
It's not really an additional insured, it's an additional interest.
Good
Because the insured
clarification.
is really the person who has the main interest in the property.
Right. So it's additional interest. So just like the mortgage company is listed as the additional interest, you as the landlord would be listed as the additional interest. So that
Yeah, and a
you're
lot of
covered.
times property managers, a lot of investors will have property managers and they request to be listed on there. A lot of too is because they're going to be on site and they want to make sure, again, that
They're
liability
covered.
of them being on site is covered as well. So again, it's not a problem to add. There's generally not a cost to add an additional interest on a policy. So there's probably no reason not to do it.
The reason I brought this up is because I was talking to clients, and there were some last week that they didn't have renters insurance, and so I ended up giving them the FEMA website, and I was like, here's a FEMA website, and they're like, oh, well, I don't apply. I was like, listen, it's not for you. Give it to your tenants so they can have money if they need it. And listen, because you need a happy tenant at the end of the day, right? They're taking care of your stuff. They also have to pay you.
Right.
So I was like, hey, just here's that for them.
There's a lot of things flying around the table here, but one of the things that I just clarify for whether you're a landlord or a homeowner or a tenant. So basically your three categories, right? You were talking about loss of use. There's also like loss of rents coverage, and then I think it was loss. There was another one you threw out there. It was loss of.
Well, fair rental value and loss of rent is the same thing. Just different insurance companies call it different. But that's basically what it is. That's for the landlord to provide them with replacement for rental income if their tenant has to move out because of a covered peril.
So on the landlord side, it would be loss of rent.
Loss of rent or fair rental value. Those are generally what they're called most often.
On the rental insurance side, the tenant, the actual tenant living in the house,
Or homeowner.
or homeowner, it would
Loss
fall
of use.
Loss of use. So you'll see that line across all three policies, whether it's called loss of use or fair rental amount. So you can get coverage that's to pay yourself to go live somewhere else if you're the homeowner or the.
Yeah, and those are generally, I'm sure there are policies that exclude those or that don't automatically have them. 90% of policies automatically. So once the dwelling value is established, a lot of times those coverages are automatically included on a renter's and a homeowner's policy. On a landlord policy, again, most carriers automatically include that, but some you do have to add that as an endorsement to the policy. I would never write a policy without that on there, but I have seen some that don't have it. So either the person was, again, trying to get cheap, again, to save a few dollars, but now they've lost that potential of getting that income replaced because they didn't, spend an extra $40 to include it on their policy.
Well, in this situation with Snowvid 21, you some of these houses, the flood damage is 6 months worth of remediation repair before someone's getting back in there.
Yep.
So if you have a $1,500 rental for 6 months, that's a huge loss.
Correct.
So to save $100 a year to not cover.
It's not even that much.
Yeah, right. And you lose $6,000 over $50 or $100. It's kind of a silly thing to do.
Yeah.
We keep referencing Snowvid 21, but it's like, hey, this can also, let's just say this doesn't happen again for another 100 years, but any pipe burst, right? Like any pipe break, not by Snowvid 21. That these are still things that you're going to need in your insurance policy. Just this one big storm brought it out, right? Like exposed everybody to the same thing at the same time. So like mass education, I feel like happening here.
Yep.
At a very expensive cost to the world. So, is there anything that you would think that we can offer to the audience that it's like, hey, think about this, going forward, right? Even if Snowvid doesn't happen, Snowvid 22 doesn't happen,
I'll tell you, well, there's never been a time where every Texan's pulled out and actually read over their insurance before at one time, right? So
pretty much every homeowner's policy and most landlord policies are going to cover pipe breaking. Now, it's the subsequent damage from the pipe breaking, the water damage that's caused because a pipe breaks in the house. It could be a water heater burst. It could be the line to the dishwasher comes loose. And that's going to be covered by most every policy. It's that people do also need to understand that by and large, general wear and tear of pipes is not going to be covered by a policy. So those are the type of things that you really have to look out for. Now, there are some companies that will offer things called service line coverage. That's rarely offered on a landlord policy. Of all the companies we write through, we actually only have one company that will offer that. And that's going to be covering anything from the footprint of the house outside. So, your piping that goes to the sewer, your
water spigots or
electrical lines going outside beyond the house. That can be added on a lot of homeowners policies. So I think that going forward, that's one thing that people ought to check with their agent on their homeowner policies. Do they have that coverage? Do they need that coverage? What's the cost of that coverage? Because again, not every company offers that.
So you're right there. That let's just say you have from the street to the front, you said the footprint wall of the house. If there's a break in the pipe in the yard,
it's generally not going to be covered.
Right? So that's huge.
Because that's not the city anymore, right? After the valve, it's not the city. It's officially your property. Mm-hmm. And that's a lot of work. You're digging up frozen ground if it's during that time, right? But
so if the line breaks and water floods into the house, that's still not flood. That's still water damage.
But that's mostly still going to be covered.
Yeah.
It's just because people think that the insurance is going to pay to fix my pipes. Mm-hmm. No, it's fixing the damage caused because
Correct.
The pipe broke.
Yeah.
So there's still expenses there. But again, keep in mind, once you've paid your deductible.
I got a question. What about, because you said wear and tear, right? What about like a slab leak, right? If it's not caused by a foundation, maybe, right? But now you then have to potentially tear up a lot of stuff.
And that's where you really need to check with your policy to see whether you have foundation water damage coverage. Not every homeowner's policy has that. Some have to be added by endorsement. We try and add that whenever possible. Usually it'll cover up to maybe $25,000 max. Some will cover up to 15% of the dwelling value. It really just depends. The sad part is, on landlord policies, almost no carrier offers that. And I've never really gotten a good explanation. I've asked a lot of marketing reps for different insurance agents, why would you offer that coverage on a home but not on a landlord policy, which is essentially the same as a homeowner's policy, except that it's not owner-occupied, it's tenant-occupied. And I've never gotten a good explanation on it. And to me, I think investors would be more than willing to buy that, because yes, a slab leak can be very expensive. Water starts coming up into the kitchen from underneath the house. The cost to get to that piping, to get it repaired, the damage caused. So it's really kind of confusing why, and it's unfortunate we don't have a lot of options to even offer that. The few companies that offer it, one of them, they'll only write replacement costs on a home if it's less than 40 years old. So, unless you've got updates, you've got proof of updates of the plumbing, electric, HVAC, and roof, then you can get replacement costs. So, a lot of investors are buying homes that are 40 years old or more. That's not, when you start thinking about, that's 1980,
yeah, it's
1981.
Not that old. Yeah.
That's right. Is my math right?
Yeah.
1981. So, again, it's. I wish that was available to more investors, but it's just not. But for homeowners, if you don't know if you have that coverage, grab your policy,
Yeah, I'm
call
gonna have
your
to go
agent,
check.
find out and check, see, can I add that?
What's the name of it again?
It's called foundation coverage or foundation water damage coverage. People kind of get confused by that a little bit because, like, I'll use myself, for example. I had foundation damage, got all these lovely cracks in the walls and the ceiling. That's cosmetic. There was no subsequent damage caused. No pipe broke or anything. So I just had to pay thousands of dollars to fix the foundation, and I've got these beautiful cracks in my walls and ceilings that I'm going to have to eventually repair. So people think that it's fixing the foundation. It's not. It's fixing the subsequent damage, the slab leak, the water that comes up into the house. So look for that. Some companies actually have put a moratorium on adding that for a little while, just because until everything's thought out, until everybody knows, every spigot's been turned on, there could still be some hidden damage that you don't know about. One of the other things I'm kind of wondering from myself, what happens when I turn my sprinkler on? Because again, sprinklers are not covered.
I've thought the same thing. Mine's been off this entire time, and in my head, I'm running through the list of when I have to go. Come springtime, my honey-do list is twice as long now because I'm going to go and I have to do a once-over on things a lot more.
And again, sprinkler systems are not covered by a homeowner's policy either. So
Even if a pipe breaks, the subsequent damage not covered.
Yep.
So that's important to note. So if you have a house that's a rental that has a sprinkler system and a pipe breaks out there on it.
Yeah.
Is there there's a lot of talk about negligence. And I know that the legal term of negligence is going to be finally evaluated amongst the insurance companies, and I think the electric grid, and right, they're going to have their own little battle soon. But I've seen some questions from investors where they're like, "Hey, my tenant moved out because the power went out, so they went to their parents' house, and a pipe broke or whatever." Like where's the layering going to be? Or what is there some advice we can give our investors of like, hey, this is why you require this is an added reason of why you require renter's insurance? Because hey, if the power went out and across the whole neighborhood, but they left to go to safety,
survive,
right?
Yeah,
to survive, is anybody really negligent? They didn't do it on purpose. They didn't,
Yeah, I mean, that's unfortunate. That's not an insurable loss, power failure. It's just not, and it's an unfortunate thing. So any of those expenses, and even I really don't think a renter's policy would cover that, because again, it's not a covered peril, loss of power. So I know it stinks that someone decided, I'm going to go stay at a hotel and it's going to cost me $150 a night or whatever it is, and they think that insurance is going to pick that up. Unless water damage caused them to have to leave, that's a covered peril, they're out of luck. And from a landlord standpoint too, that's not going to be something that's even going to be covered under loss of rent, where you can give back to your tenant. But it goes back to, how do you want to be as a landlord? Do you want to be, I feel terrible that the power went out there. That's really not my responsibility. However, I recognize the hardship that you incurred. Here's a few dollars, to help you out.
Here's a discount on next month or whatever. Yeah.
However you want to handle that. But there really is no liability essentially for that type of occurrence.
I wonder if it'll be a line item later. After this, if you'll be able to,
you're talking about changing.
Yeah. They're not going to add. They're not going to add things. They're going to remove things.
These policy language has not changed in 30 years, basically. So I don't think they're going to add new perils because of this.
No, it's like Nick said, they're going to remove them.
Yeah, well, I'm just saying, if they do, they usually don't. They don't add buffering. They that cost us money. Let's take that out, so it's not covered.
There might be some restatement of some things, some clarifications on some terminology to ensure that there's no vagueness on certain things, or someone might try and argue that, well, it doesn't say this is specifically excluded. Show me in the policy language where it says this is excluded. And if it's not specifically excluded, they could maybe argue that it should be included.
Mm-hmm.
So companies may have to, modify the language in their policy. I still don't think that they're going to back down and say, look, this says here are the perils covered. It's not one of the perils covered, so it's not covered.
Your SOL. Yeah. This is going to be like we said. There's billions here on the table that are. There's a lot of insane language as well, right? Like I'm a real estate investor and I've been doing this a long time, and I understand the words being thrown around, but this is so overwhelming for the investor, the homeowner, the tenant. There's just so much here, and it was already a stressful situation.
After COVID, sure.
It was already a stressful year, and then it was a stressful, holiday season, and then into the beginning. It was just this was very, very, very interesting time. We keep referencing subsequent damage. I think you said
subsequent damage,
right? And so again, the power failure isn't the damage. The damage is done because of the power fails, the heat goes off, then the pipe froze and broke, and then you flooded, then you had to vacate, right? So the everything up until the pipe broke, so I'm trying to identify the.
I would be shocked. I just don't see, I know a lot of people think insurance companies are evil, but I don't see that they're going to try and use that as a workaround to say, well, the original cause was because the power went out, so we're not going to cut. Because again, the language is water damage coverage from a burst pipe. Mm-hmm. I don't think that they're going to try and say that what caused that. There's language in, even like on a vacant policy, where it says that damage from frozen pipes are not covered unless the owner has maintained heat above 55 degrees, whatever that number is, or drained the pipes. Mm-hmm. So if the landlord has made all the proper precautions and they kept the heat on a vacant property, and the power goes out, they can't hold that against them. They did everything they could do, but because the power went out, the heat dropped, it got cold, the pipe broke, insurance companies will pay for that. I just don't see them trying to use workarounds. It just wouldn't make sense to them.
I think the one story you were trying to get to before was the multi-million-dollar house, right, where the power went out. They left because they weren't going to stay there. After they left, they had a pipe burst, and they're fighting with their insurance because the insurance is saying because they left, they vacated their house. They weren't protecting
the asset.
Yeah, so he's having some issues there, and he's like,
but this is just like the $5 million house.
Yeah, it's a very high end house, so it's a very big claim.
And that's still surprising because, when you get into some of the higher value homes, a lot of the higher value carriers, companies like Chubb, Pure, some of the, which we don't represent any of them, but I just know from experience them, they're usually like, take care of their clients, no question asked. So I almost wonder, I would be curious who the carrier is, and we don't need to name names.
I don't know the.
I don't know the specifics either. But
it's
it's interesting because everyone keeps saying, "Well, I couldn't stay here. We had no heat, or it was too cold." And again, we mentioned very early on in this conversation that we have never had a storm this bad where it was this cold for 7 days, right? It was so cold for a very extended period of time, and then you had loss of power for. Some of our friends had loss of power for
we were like
3
9
to 5
hours off, 1 hour, like 45 minutes on, right? So for the entire week.
So you couldn't.
And then on top of it, you have other people
high enough.
Then you have people living, and we live pretty well, right? There are people that don't live well and then lost power, heat, and it was.
One of the things, and again,
ridiculous.
I know the toothpaste is out of the tube for that client, but one of the things that we do try and tell people, don't talk too much. When you're reporting a claim, don't over detail. You basically want to say, water pipe broke in my house. Why would you go into the narrative of it was too cold, so we left, and because it's don't over explain. Even like for people that maybe have home warranty systems and we're going to use like if they've got damage to their pool and they're going to use their home warranty, Instead of saying my pool froze, say my pool's not working. Let them make the determination of what caused that. Don't over talk to the point where now because most times when you're filing a claim, it's a recorded statement. And so you don't want that to give them too much information.
You just tied your own noose pretty much in a sense, potentially.
This is not related to this, but there are times too, we're talking about vacancy. A lot of times a landlord has somebody a tenant moves out, and most landlord policies have a vacancy period. It might be 60 days, and there's no problems with coverage. But on day 61, technically a lot of the coverage goes away. Well, why would you necessarily say, my house has been vacant for 3 months? Just say, I had this problem. Nobody's living in my house, and I had a water pipe break. Leave it at that. Most times they're not going to say, I need to know exactly what day the house became vacant. I can't remember exactly when. We're not talking about committing insurance fraud. Imagination. We're just talking about let the insurance company determine,
it's like, don't go to the doctor and tell the doctor what's wrong with you.
Exactly. Yeah. I've got a broken pipe. I got water damage from a broken pipe.
You don't know. I'm a homeowner. I'm not a plumber. I'm not an electrician. I'm a homeowner.
Yeah.
What happened? I got water coming from the ceiling. Yeah. Come and help me.
Yeah, exactly.
Yeah.
So, again, it's a little too late for the people with the $5 million home, but that's what I would kind of recommend to people is just, here's my loss.
Help.
What do I do?
Yeah. I think some of a friend of mine, she had what I would call a total loss, but she getting help that she needed. But they were her company had chastised her insurance carrier when she filed her claim. It seemed like they had chastised her for the time span from notice to reporting. It happened the night before, and she called the next day, and they were like, well, you didn't, you were like, they were chastising her for that time span that she didn't call in, and they were like, well, did you send a plumber out? And she's like, no, it was the middle of the night, I cut the main off, and so they were like, well, they're getting into some hairy gray area, I would think, when they were giving her some. And I didn't really give you much of a story there to go on. I'm sorry, but it was just you're looking at the fine-tooth comb of conversations with insurance carriers, and so in general, I guess we would say be more vague and.
Yeah, exactly. I mean, because again, too, it still shouldn't really be an issue to the insurance company of when. It's more of what steps did you take to mitigate that loss? They turned off the water.
Yeah.
That's the perfect thing to do. I mean, it would be, I could see chastising as there's been water pouring out of my ceiling for the last 12 hours and you didn't try and stop it. Mm-hmm. Then I can see some chastising. But if they've done whatever they can to mitigate, to stop further damage from occurring, the insurance company should say thank you.
Yeah.
You've now limited the amount of the cost of what we're going to have to pay here. So that shouldn't be an issue. Probably got a desk adjuster who'd been taking calls all through the night and just was in a bad mood at that point. Still no excuse, but again, it's that to me is people ask me too, what's my time frame for filing a claim? Get the claim filed right away. I mean, whether you want to get all the repairs done right away, because, especially on a situation where you've had water damage, where you want to get a good water mitigation company, a water restoration company out to bring in the dryers, make sure the drywall has all been removed, because the last thing you want to do is not get it properly dried, and then you have mold damage arise, which is likely not going to be covered by the insurance, or maybe minimally covered by the insurance. So you may not want to get all the repairs done right away, but you've got that claims process going.
And you have to start somewhere. You have to start the repair process somewhere.
Yeah, get that process going as soon as possible. Especially, and again, we're talking almost 2 weeks ago now, but it was a lot of people were having to get on a list to have a plumber come out.
Yeah, you couldn't even go to Home Depot and get parts. Right? There was a shortage supply of everything. one of my crews was they were struggling to find batteries for their tool equipment because it got so cold that the batteries weren't holding charges, so they had to get new batteries, and they couldn't even find batteries in the stores. So you're just talking about a supply chain issue as well. Even down to the restoration companies, they don't have enough dryers.
Right.
I mean, they're not used to, how many claims are we talking about?
About 750,000.
I mean, we're not used to needing
No.
750,000 dryer, right? Air, I mean, it takes how many fans and dryers in a house to, So I think one of them, 16. She's using 16 fans and dryers, in her house. So this is a 2-story house, but imagine that times 100,000. That's a significant amount of equipment that's needed. But what do you see going forward, landscape wise? What do you?
Yeah, and I think if nothing else, this has probably been a big wake up call to people to, number one, get to know what coverage they have and what they don't have, what their limitations are. If you don't have foundation coverage, can you get it added to your policy? If you don't have like a service line coverage and it's not available by the company you offer it, maybe you need to reshop and see what the cost difference would be to get that on. So I think those type of things, and if nothing else, hopefully everybody now knows where their water turnoff is in their house.
Oh my God! Yeah.
And if you need to have one of those keys, get one of those keys. Get it through Amazon if they're still not available at Home Depot or Lowe's or whatever. Make sure you know what to do. And again, we hope that this is a once in a lifetime event. But if it's Snowvid 22, be prepared for it. People with pools, we're finding out that by and large, damage to a swimming pool from freezing is not covered by any homeowner's insurance policy. That really sucks. Especially pool equipment can get pretty expensive. If there's cracking in the pool, things like that, that's going to be an expensive fix. When you get those fixed, check with your pool manufacturer, equipment manufacturer. Is there a warranty I can buy going forward to have this covered? Those are the type of things, and I think just, these are going to be a lot of pictures are going to be, etched in people's minds of what some of these losses look like. And so knowing going forward, at least from an insurance agent standpoint, being able to talk to clients about, here's why you need this coverage. Here's why you don't get a DP1 basic policy is because it covers no water damage. Well, what if you'd have had that policy and you had a frozen pipe that broke? Now you're out $5,000, $10,000, $20,000.
Your whole house potentially, right?
So, those are the things I think going forward. Again, we don't know what rates are going to be. It's just going to be an ongoing process as insurance companies start, evaluating what they lost, where they may need to take rate increases. So again, look at your renewals. That's one of the things that, I think people, especially people that have their insurance paid through their mortgage escrow account, they don't really pay attention to what they're paying for their home insurance because the renewal comes, they just stick it in a drawer or it's electronic and they don't look at it and the mortgage company just pays it. Well, unless you see an escrow shortfall because of that something's brought to your attention,
out of sight, out of mind.
Yeah. So make sure you look at that at your renewal. Know when your renewal comes up. And if your agent hasn't notified, hey, by the way, your rate went up 48%, you need to shop it.
Yeah.
So again, those are the things going forward is for people, I think, to be very vigilant of what their policy covers, what it doesn't cover, what are they paying, what are their options.
I know you guys offer it every year, right, for your clients. Mm-hmm. How often should somebody reshop their policy, do you think? Every 5 years, 2 years, 3 years?
Well, I think a lot depends on what your rates are doing. I mean, if you're seeing 9-10% increases every year, that's not bad at all. You should, nobody likes any increase.
Yeah.
But, if your increases are minimal from year to year, but then also, too, what happens is, and I see this a lot more with people that have insurance through direct writers, like a Liberty Mutual, a State Farm, a Farmers and Allstate, they may not see big increases, but they may not realize that they're paying way too much for that policy. So maybe not every year, but depending upon what you see at your renewals is that should direct you to decide, you know what, let me just see what else is out there. Let me make sure I'm getting the best policy at the lowest rate.
Because for that same amount of money, you might be able to get more.
Exactly.
And that's, especially
you-
during this catastrophic, it was needed.
And we go to, one of the things too, because we do talk a lot about landlord policies, some of these direct writers, they'll offer a landlord policy, but that's not their expertise. And so I see people that have landlord policies from other companies, and they have no idea what they've got or what they don't have. And if someone, I tell a lot of people, look, if you're happy with that company for your primary home and auto, that's fine. Stay with that agent. But deal with a insurance agent that knows what you need for your investment properties to make sure those are properly protected. Most investors are building passive income for the future. Why risk not having the correct policy, the correct coverage, and then suffer a loss, and now all that money that you have been saving up is now gone?
Yeah, it's important to know what you're insuring, know what you're paying for,
What your policy covers and
know your
has.
numbers, right? Outside of just the numbers of the monthlies, know those limits.
Yeah, I'll see dwelling fire policies, landlord policies that have a bunch of personal property on it. Well, are you furnishing that house? No, then why would you want to pay for personal property? I mean, you're just paying for something that you don't have an interest in. So really, on a landlord policy, really the only thing that would be considered, if maybe you as a landlord, some will supply a refrigerator, some might supply a washer dryer. Those are really the only times, like I said, unless you've got a fully furnished property that you're doing short-term rentals on, different story.
Yeah, different layer of insurance there. Yeah. Well, I appreciate you coming in and sitting down with us. A lot of overwhelming time for everyone, and so I'm just happy to have an expert here to give us, an overview.
Yeah, clarifications. Yeah, absolutely. Don't wait until you need insurance to read and know what you're actually covered. We see it all the time with our brother Mike in roofing. A lot of he'll go to a house and he finds out these old timers, they only have an ACV policy and they're not covered for anything. It's because they want what that cheap is.
Or some people have a paid off house.
Yeah.
They don't have a mortgage company dictating and demanding what
That's why
insurance.
I meant
right. So again, even if you don't have a mortgage, that's actually the time when you would need the health checkup on your insurance policy the most, because that's when you're really not regulated on what you are mandated to have, right?
Absolutely.
So if you do have a paid off house, that's one of the most important times. That is all your equity. That's your estate, right?
Exactly.
So don't mess around with it.
And again, if you survived this without having any damage and you consider yourself lucky, well, don't say, well, it's never going to happen to me. I survived this one with no power damage, no power loss, no water damage. That should be more likely that you're next.
You just got a free education, a free lesson.
Yeah,
you better learn
check
from
your
it.
policy
Yep.
as much as anybody else that just had a loss.
A buddy of mine is on the hospital grid, as everyone's realizing that maybe the next home is to shop for when you're on the hospital grid. You won't lose power. And he was like, "Oh yeah, I'm on the hospital grid. I'm always going to be like." And I'm like, "You're right. He might be next, because who knows? They might turn off the hospital the next time, or find a way to cut off the houses and keep the hospital on." But it's something no one was expecting. So you were going to say something?
Yeah, I was just saying, because you mentioned about the roofing. One quick thing, a little tidbit that a lot of people don't know: if you do get a new roof, you need to actually tell your agent that you have a new roof. Logic would think that the insurance company would automatically give you a discount for having a new roof. That doesn't happen. So you need to let your agent know, hey, my insurance company just put on a new roof, give me a discount. You get a huge discount for a new roof on a property. So again, just a little tidbit: if you've had a new roof put on, and look at your policy, see what it's rating your roof at. You may still have a roof that was rated as 14 years old and you had it replaced 3 years ago, I don't know that they're going to go back and give you all that premium discounted back 3 years ago, but at least make sure going forward. So just know that, because people are surprised when they find out, what, the insurance company didn't update my policy?
That those discounts, are they rated? 3-tab, 30-year, and depending on what roof I do, does that discount increase potentially?
No.
Okay.
Really what it does is on your replacement cost estimate on your house, a 3-tab shingle, your basic composition 3 is going to be a little bit lower on your replacement cost evaluation, as opposed to if you have an architectural shingle, a nicer roof. That just goes into play there, but it's for discounting now.
Do you? Is there anything else as an investor that would be important to let your insurance person know? Hey, we just rewired the whole house, or is there anything else that
Might get a savings.
Yeah.
It's
like, hey, because we were talking about replacement costs, right? Well, you said if they
I got
like
automatic key locks or something, anything security wise, I might give it.
Generally not so much on those type of things, because a lot of those security system discounts really apply more to your personal property to protect that from being stolen. So on a landlord policy, since you're really not, for the most part, insuring much, if any, personal contents, having a security system is not really going to get you a discount.
What happens if we say that we have a recirculation system on our hot water heater now, so a hot water heater won't burst potentially?
Yet to see that discount, but again, going forward, who knows what insurance companies may do. I mean, again,
you'd have to put a UPS backup on it.
I don't know how many years ago there was no such thing as a smart home discount.
Right.
Now there are.
Right.
There are discounts for having smart homes. So you never know from an investment standpoint whether insurance companies might be offering some of those type of discounts in the future. I just think keeping
Thermostats.
records.
Thermostats is usually a discount, right? That you guys get? No.
It's energy.
The energy. I'm sorry.
It's energy. Yeah. There are energy.
And you can get energy discounts for using smart.
Right. But not insurance.
Yeah. Sorry.
Right.
I'm wrong.
Yeah. But like I said, just like you talk about, if you rewire things like that, those are all important things. You may not necessarily need to let the insurance company know, because it's not necessarily going to get you a discount, but just make sure you have that. So if you have a loss and you're sitting down with an adjuster, I just replaced these floors a year ago. I just put in granite countertops a year ago. I just put in a new HVAC system 2 weeks ago. Things like that, so that you can sit down with an adjuster and say, these things are newer and these are the values of these items, so that they can properly adjust the claim.
I think that's definitely knowing your numbers, keeping your records
up to date,
keeping everything, be organized. It is a business, right? It is the insurance company's business to protect themselves, but it's also your insurance. It's your duty to protect your asset and your home, and so you should know your numbers. You should keep your records, and as we all know now, know what you're covered for. And I'm sure a lot of people are knowing what they aren't covered for right now. And that, but it sounds like insurance companies are doing the right thing.
I think for the most part.
Yeah,
I really do.
I haven't heard too many horror stories. A few people called with some complaints and stuff, but everyone seems to be. I think they realized that this was such a catastrophic event that this was no one's fault. It was truly an act of nature. So, I appreciate you coming in. Thanks again for coming in and talking to us. And
what's your? Do you have an email address or contact information? I'm going to put up on the video, but if.
Sure. So easiest way to reach me is my office number, which is 972-930-7086, and my extension is 114. And then my email is L.Siegel, last name is spelled Siegel, at insureintegrity.com. So L.Siegel at insureintegrity.com.
A lot of things to think about with Snowvid 21. that name's going down in history. Yeah. Awesome. Thanks again, Lee.
Thanks for coming in. Thanks for watching, guys. Hope you guys enjoyed. If you have any questions, please drop a comment below. We definitely get with Lee, and we'll get you some answers. Click the like button, subscribe.
Yeah, definitely get in touch with Lee and reevaluate that policy. Do a health checkup on all your insurance policies. Really, yeah. So like, subscribe, share, and reach out to us.